What's going on, guys? We're going to be going over the trade recaps for today. We took Meta, we took Tesla, we took NVDA, and we took Google today for a pretty nice day. Pretty solid day, actually. Um, so I want to go over a little bit about indices, a little bit about SPY being a little bit overextended to the downside with the gap down, as well as, intraday price action. So we're going to go over kind of what I saw on Tesla for the first trade. The first trade was I had the correct idea. I was just a tad off. So what do we get? We got a sell off. We got a gap down first of all, and then a sell off right off the open. Kind of shook out some shorts here. Uh, Bears took over down and took this down. Bear flag. Boom. Further breakdown. And then this is actually the gap fill entry. So if you go over to the daily, what you're going to see is you're going to see right here how this was a gap fill, right? So it is a gap fill into a major daily level right here off of this 275 down to like 274-ish range. Um, so overall, I wasn't really full on going short just because of a gap fill. Actually, understanding basic liquidity concepts of the market, gaps oftentimes are known to be shorted by retail very heavily. So when a gap is being shorted heavily by retail, and you see a lot of this put flow really step into play here, you might get that underlying manipulation where you enter the gap, it looks like a nice short, and then from there on out, it's kind of just a stopping volume type of candle, and buyers start really building that position upwards, right? So this technically looked like a bear flag on a declining move up, but the fact that it was making higher lows across the board, the fact that it was right into an entry of a gap fill, I did not like the trade for the downside. And why is that? That is because, like I said, you break down right off the open, and then you get this stopping volume out of nowhere on this small spread hammer candle at this low of day right at 9:55 in the morning, and then from there it's kind of a consolidation period, and we start changing our character, meaning going from making lower lows and aggressive lower lows to kind of stopping, trading flat, and then eventually making these higher lows across the board, right? So that was the first thing that I noticed with Tesla. So if we go into the very smaller time frame, I took the entry over here. Uh, we'll hide all of these for now, these drawings, and we're going to take a look at the hourly. So what the hourly was, guys, was this was a liquidity sweep on the hourly of this candle low, as well as this gap fill entry. So here's your gap fill entry, uh, right kind of here. That's your major low, or you can even go up here and take this off. Boom, sell off. Here's your wick into your gap fill. Seems like we wicked down, wicked up, closed above, wicked down, wicked up, closed above on the 1030 print, right? So going back into the intraday price action, what did we see? We saw obviously a retracement right into the gap fill level. That retracement into the gap fill level had a higher volume breakout with a retracement on lower volume into a higher low hammer. This is just a 1 minute. I don't really watch the 1 minute, guys, but my entry was up here as we claimed VWAP. That hourly candle closed up here around 10:30 range, a little bit after 10:30. I ideally like this for a gap trap because oftentimes what happens is they trap the gap with these shorts, then shorts go underwater after big buyers step in with big liquidity inside of the gap. Therefore, shorts end up going underwater. They're red on their positions up here. They may be in denial and double down, or they might start to cover and turn into buyers, therefore releasing that overall short pressure off of the equity, right? So This was like I said, it was a bear flag invalidation, a sweep of sell side liquidity. So this would be your sell side liquidity right here, this low into the gap. And I added here to anticipate the higher low. I saw heavy bidders really stepping in here to, go for that higher low right off of the range after reclaiming the range off this 275 psych level. We then pushed up. This looked like it was, going to potentially break out. I was up 11% up here, but I wanted more of a breakout, and we kind of formed this equal high here on a small time frame, retraced down a little bit lower, and I got stopped out here for a 5% loss on a failure to hold VWAP. Now, a couple key takeaways about this, guys. We're going to delete all of these pictures and messages for now, and I want to really dive into the 5-minute time frame and show you what I could have done better, show you overall what could have been done to avoid the absolute indecisiveness that I had, kind of. So we're making higher lows across the board, guys, and obviously what is going to happen if we seem like we're having no momentum to this upside, in which buyers really aren't, and if it seems like, we need to obviously capture liquidity for the capture and tag sell side liquidity, we are going to do so to move higher, right? So you can't have a premature reversal where the stock has this absolutely disgusting selling volume, absolute disgusting 5-minute candle on very high volume, and then all of a sudden just a flat trading range on stopping volume, higher lows across the board, and then a just absolute reversal. It's not the most lucrative approach to taking a trade like this. What is going to happen is you're eventually going to get a tag of sell side liquidity, or just a further down push to raid stops or to build a position in which buyers are very interested, in which buyers really like, and overall just a solid spot to potentially see the overall trend flipping and going long, right? What would that be, guys? That would be potentially a break of structure over these equal highs, and then you get the retest into the range. That was then resulted with a 5-minute hammer candle right off of your EMAs. It looked pretty solid, um, as well as VWAP. This was also a VWAP retest and then go. Another thing, guys, is there was no really, like I said, much of a valid retracement. This is kind of a slow grind up, no momentum for the buy side. Therefore, you might need to pull out your Fibonacci tool. And normally, what I like to do is I like to look for a higher low to be put in place at a discounted premium. Now, what that means, guys, is that means it may start to look a little bit bearish, but yet again, that could also just be buyers really getting ready to build that buying campaign for the opposite side and have enough pressure to meet their end goals of forcing shorts to liquidate their positions and turn into buyers as well, that previously shorted down here. So this was still a micro trend higher low right here. And all we did was really tag this sell side internal liquidity that was sitting right here off of this premature, looks like it meant to be a premature breakout, which didn't really see much success. So I tried to anticipate a breakout here. I went up 11% up here. We then formed a lower high with a tweezer top right off of this high. Boom. This is your tweezer top, 276.25. That would be called. It's not quite a tweezer top, but what it is it's a very close uh, open close for the green candle and open for the red candle, and the red candle that opened never really gets above the close of the green candle. Now, I personally like tweezer tops more with a larger wick than what we have here, but this was a tweezer top for the lower high, and then obviously, like I said, they just sent this down below a particular low. This is where buyers really initiated that liquidity sweep internally and then sent it up. So this is all just about patience, guys. Um, you might get a leg down. Um, I'm not saying that this is just a pure sweep of liquidity to either side, but what do we have here? It's kind of looking like a reversal candle in the hourly print down here. If you take off the extended hours, like I said, it looks like a reversal print as well. Liquidity sweep under this low, higher low being put in place from this gap fill entry of where these late bears were really trying to take advantage of this short opportunity that resulted in a fake out. So anytime you guys see a fake out like that, be very patient with your entry, and then obviously, take that take that trade whenever the time really looks like it's presenting itself for an opportunity to go long. I personally would have waited for the tag of liquidity down here internally, see the suck up, and then obviously, a retest with a lower wick, much higher close on the body itself, indicating strength. You could potentially go long on a retest down here into your moving averages, and then, this is your stop loss. Your take profit could be all the way up here at this supply range that was near this high of day, right? So very key concept there with understanding liquidity within the markets and understanding overall how retail really gets baited into trading something that won't play out. So that was the Tesla trade for a 5% loss. Um, yeah, so we'll go on to the next one. The next one would be Meta. So, or we'll go over Google actually. So, one thing that I really want to talk about with Google is it was extremely clean in terms to the overall indices looking like a sell climax. If we go over to the overall indices over here, you can even go over to Qs. What do we have, guys? First of all, what we have is we have this massive base before the leg up. Therefore, that could look to potentially be a support. What I do is usually just draw myself a nice zone within the middle of the gap, because let's be real, guys. Gaps, they don't always just fill fully and very cleanly, right? You could get a reversal in the middle of a gap. Just because it's a gap doesn't mean that it can just fill from top to bottom as soon as we enter. So the bottom of the gap was down here. We have what looks to be a major resistance that could potentially be a support. And what I really saw on indices that made me favor the Google trade was that we first of all got the sell off the morning, and then we're kind of, pushing up, higher, lower high, and then a push down. We take out this 15-minute orb low. That 15-minute orb low then results in another bullish looking candle as we approach this level down here. This bullish looking candle then results in a high volume elimination of supply. Each and every time you see a leg down with a candle that looks like this on higher volume with a lower volume push, that really shows and signals that there's going to be an elimination of supply overall within the name itself. And then what you really want to look for is a diminishing spread across the bottom of the range into a particular level, into what looks to be like the bottom of a trend, and overall just a reversal candle, potential lower highs to be starting to be put in place, and overall just looking like a buying campaign is really taking place, which would be called a sell climax. So what a sell climax is, I'll draw it out for you guys real quick. It is a leg down, a hammer candle up on high volume, potentially another leg down. That leg down results in possibly lower volume, leg up again with a hammer candle right here on high volume, and then, potentially just a shortening of the thrust, which would be considered sort of like a loss of momentum for the trend that we're trading in, and then potentially trading flat, making higher lows, pushing down, trading flat again, seeing our minor sign of strength above a particular high, and then waiting for that to hold and go long, right? So this was overall what I saw on QQQ. What we had was we had the sell off the morning, like I said, and then a leg up. That leg up resulted in a very minuscule lower high from the overall trend, and then we pushed down. That push down was on lower volume, followed by a high volume. Looks to be almost like a tweezer bottom, a shaved top on this candle. There wasn't a ton of sellers within that range. And then we push down. Push down results in this reversal looking bar, very tight spread, Not a lot of volume. It looks like bears could be really getting exhausted down here at these lows. And then we're starting to get these higher volume bullish candle looks that look like price is moving much more fluently. It looks like bears for the short term are getting extremely exhausted. And then we obviously put in a lower high, push up, and then potentially accumulate one more time off of an equal low. That equal low then results in an inverted hammer with a preliminary stop bar being this one right here. Push a little bit lower, lower low from this bar, and then a higher low technically, or an equal low from this bar down here. And then we obviously, have that nice push up, and then our minor sign of strength, which is right here, guys. So previous high, previous, leg down, you're going to be looking at a reclaim of that level as well as your EMAs into a potential long opportunity here. When you get the retest, it looks like it's a push up on higher volume, retracement on lower volume into your break of structure, which would be right here, right into your EMAs, potential long trade, another sign of strength right over here where we push up on increasing volume, retest on lower volume than the push. That then holds with a tweezer bottom and then push higher. Obviously hold these ranges right here with a hammer candle look to it. And it's going to just favor continuation all day, guys. So those were bears getting squeezed out into the gap fill. It's very similar to Tesla. That's what I saw on the overall indices. So let's go over to Google now. This was at 12 o'clock, so it was a little bit awkward, but this is the perfect spot, guys. Right where indices were showing that minor sign of strength, especially QQQ and overall big mega cap tech names, we're seeing this minor sign of strength right over these previous highs and then push. Google had the same look to it. First of all, it was a push. It was obviously, diminishing lower lows, a major loss of momentum into this hourly demand zone that stretches back over to the 29th of June. And then obviously we look to have tweezer bottomed on the hourly out of the demand. You go into the intraday time frame, we start to get that leg up. Overall, tech was really moving. Google hasn't really seen that rally much, much, uh, much yet. And then obviously, what you get is you get a push up, and then obviously a change of character where you start trading flat or start making these higher lows across the board. And then, like I said, same exact look, guys. You get your minor sign of strength from this 15-minute orb opening morning bid to this SR flip. Looks like a push under retest. Shorts were still sitting here, and then they took it for another leg lower before they got exhausted. These guys are obviously going to be getting squeezed out as we reclaim this level, reclaim the range in which that breakdown really happened off the morning, as well as that retest and fall. So this is a very key level, and the fact that this really lined up with VWAP really sent me a signal to potentially catch this for a long side trade. We did so with a, a very nice high volume break above the level, which is what you want to see on a breakout with a 5-minute close above, almost a shaved top on the bar's close, and then obviously this 2-bar leg down with almost little to no momentum on a very tight spread on low volume. That is going to favor continuation 9 times out of 10. And overall, there was just zero reason to really stop out of this trade ever since until we hit up here at high of day or the supply range right off the open at nearly the 120 psych, in which I did get out over here, and then I held some runners to the top of the range. I got out up here for like a 70% return. So that was a clean trade. We'll jump into the next one. The next one was NVDA. This one was also clean as well. It was an entry on the Dragonfly Doji. Why did I really like this one, guys? I really like this one for the sole reason that um, First of all, we kind of got our preliminary stop bar and then a lower low, high volume hammer candle. Not necessarily a hammer candle, but just a reversal looking strong bar with a shaved top, followed by a digestion bar on low volume and then a leg up. We got that leg up right into this double top up here. There was leftover supply sitting up here within this range. We then got the leg down. That leg down, guys, was then what I was looking for was AMD. It was rallying. It was going crazy with QQQ itself right around here. It had the similar look, but NVIDIA took a little bit longer. So my signal bar right here was at 11:25 in the morning. As you could see, AMD was really getting that push above VWAP and putting in that lower high already by 11:15, right? So we obviously push up, we claim VWAP, we see this nasty momentum with a very strong trend bar look right at the 11:25 close. Nvidia's 11:25 close was a Dragonfly Doji for the lower high right here with a preliminary stop looking bar on high volume, followed by a declining, very low volume, dried up sell off on the next two bars. And then it overall just looked like we were going to be entering calls here on a discount from recent swing low to recent swing high. I'm looking at that 618 retracement for a discount on my premiums. And then I obviously saw this as my signal bar, and then this was my entry bar. I entered on the close of this. My risk was down here or under these lows right here. I think my risk actually was. And then I was targeting all the way up here at these equal highs up here. We obviously went up there. We obviously saw that doji looking bar and then sold off a bit. I was already out up here for a 25 to 30% gainer on my scalp. So AMD was the lagger. It was already showing us that signal as a lower high. AMD was also showing the signal as a lower high from the macro perspective as well as we trickled down here. And then obviously this looked to be like a swing low to swing high, general pocket retracement where we were looking to put in the lower high from, as well as this low right here. So this looked pretty solid for AMD, considering the fact that it really defended that 110 psych, actually directly above it, as well as put in the lower high from this previous demand, stretching out from the end of June. And overall, just a healthy looking move for the upside, as well as indices taking that run as well. So pretty clean trade on NVIDIA. Like I said, entry, Dragonfly Doji, got the confirmation on really high volume, reversal bar. Not a reversal bar, but we're getting that change of character look. Like I said, guys, we're also kind of forming an inverse head and shoulders look. Not necessarily perfect pattern-wise, but what an inverse head and shoulders is, guys, is it is a failure to go lower. Therefore, when we push up and when we create our head after our left shoulder, we create our head for the right shoulder peak. We push up on decent volume. We retrace on much lower volume with, like I said, was looked to be like a preliminary stop bar, meaning it seems like the trend is going to be stopping here soon. We then make a very minuscule lower low with the Dragonfly Doji, which obviously comes down to test this left shoulder peak over here. So it's a little bit of a stupid looking inverse head and shoulders, but the overall concept of the inverse head and shoulders really plays out here with a failure to go lower from this swing low, as well as potentially, seeing that reversal with a lower high off of a 618 retracement from recent swing low to recent swing high. And NVIDIA or AMD pretty much told us the whole entire story when it comes to trading this name today. So it was definitely decent RR, other than VWAP being right up here, but VWAP really didn't hold much weight today with price kind of chopping up and down through VWAP. And overall, I'm not too worried about VWAP when there's no true control over price. So yeah, I wasn't really too worried about that at all. So risk to reward calculation, guys. I mean, if you want to risk the candle low or this low, I would personally risk this low. So take your long position. Here's your entry. This Here's your stop. Here's your take profit up here. So that's a decent risk to reward for a long side scalp when you're really getting that favoring continuation for the lower high off of that range. So pretty clean trade. Last one we're going to go over to is Meta. So Meta was a very advanced setup that I really want to talk about in depth with you guys. So I deleted everything, but if we go over to my trade recaps right here, here was the meta look. So Meta, what it was it was a complete lagger in regards to overall tech for the day. Meta saw a very strong day yesterday with the underlying being up like I think 4%. So there's a couple things to go about with Meta, and when you have this very diminished spread where you kind of have this wider range off the early morning right here, and then you really get down into this, diminishing looking range right here. There's a couple things that I really want to talk about with this, guys. So that is your wider range. This is your tighter range as you get into down here, and there's so many equal lows or general equal lows off of this 293 psych level. So this 293 psych level was also stemming from the PM leg up that we got on Meta for the really strong day yesterday. So it is a very crucial level with a big time imbalance being potentially filled below this. So buyers are going to be obviously trading this, but there is going to also be a lot of there's going to be a lot of liquidity sitting within the imbalance that we're watching. And why is that, guys? On parabolic moves up like this on stocks, a lot of the times limit orders won't get filled all of the time. And that's why you hear about these ICT people. I think that cult's a little bit dumb with this kind of stuff, but you overall see this ICT crowd talking about entries on fair value gaps, which are, like I said, imbalances right here. And yeah, there could be liquidity sitting within the gap. So what I was looking for was a sweep of today's sell side liquidity, which sell side liquidity would mean this low, or generally speaking, just this overall range that we've been putting in equal lows at. So when you're putting in equal lows, there's going to be a lot of liquidity to take out below a particular low. There's a lot of long side trades down here. There's going to be a lot of trades with stop losses below these levels, below this level, and below these levels. And overall, guys, banks, institutions, for them to send a stock up, what do they need to do? Or for them to send a stock down even further, what do they need to do? They need to seek liquidity, seek supply, or get a matching order to fulfill their positions to build that campaign to the down or the upside, right? So this is your sell side liquidity, and this is your buy side liquidity of our PM tight range, right? So your buy side liquidity could be this high, whatever it may be, guys. It's one of these. It's this general range up here. And what I really saw, and you don't really need to know the meaning behind this, but what I really saw was I saw sell side liquidity being snagged on high volume, so it wasn't really giving me a signal just yet to potentially watch this. And then what I saw was a reversal bar on matching volume, meaning stopping volume with that narrow of a close in a body into a massive bullish candle sucking right back up into the range, right, guys? So this was sucking right back up into the range. If you go take a look at the hourly, it looks like an hourly liquidity sweep off of this low with a nice hammer candle on the hourly that really resulted in a nice opportunity to potentially look for a change of character, meaning a potential lower high or a higher low. So here's your low. And what did I talk about this, guys? Pause the video right now. And what did I just talk about with looking for a potential higher low to really trade? I talked about a discount on your premiums, getting that very valid higher low that really retraces and gives you confirmation to potentially go long. And we're scalping 1DTs, guys, so I don't really care about, catching a parabolic move into the end of the day. It's more and less just looking at this higher low. I know that this is, sucking up. You get your digestion bar here on really low volume, and then a nasty leg up. Price is moving very fluently on high volume. We start bull flagging. I thought we might be able to see continuation, but what did I also think? I also thought, we could potentially retest down into this range and put in a higher low off of the 293 level once again, right? So that's exactly what we did. If you go over to my signals, that's what I actually talked about. Here was my trade right here. It was a 2:12 p.m. grabbed half size. That's why I grabbed half size, guys. I wasn't really looking for a parabolic breakout necessarily, just right off of sizing in on half. I was looking for potentially more of a higher low to be put in place at a discounted premium, meaning a 0.50 to 0.618 retracement from low to the current swing high, right? So that was a clean trade. Uh, it was at 212 that I got into this trade. 212 was right over here. It was kind of like the retest into our EMAs, and then that's why I said half size. Um, it is a sweep of sell side liquidity with a break of structure and an accumulative look. I started to notice this as we kind of sucked up, retested into the range, pushed up, higher lows across the board, and then we get this nasty violent wick down, guys. It was a massive market sell order that resulted in a disgusting push down on the 1 minute with a very fluent move down for the bears. But then guess what, guys? All it was a retest right back into the range. And then obviously this hammer candle look on this 1 minute on much higher volume than this very swift move down by the bears. So it sucked back up. That was my confirmation for definitely a potential long. It seemed like shorts were definitely going to suffer and see some pain for the very short-term time. Obviously, what happened was, we sucked right back up on high volume. That's a high volume hammer candle. That is a valid higher low. We're also kind of getting this break of structure look as we climb up here above our moving averages, and this is still kind of like a bear flag look to it. Here's your retracement, like I said, of into the 0.50 fib range, as well as just this general zone in which we were seeing pullbacks and pushes into. So very clean trade there, especially after we kind of got this flat trading here. I was red a little bit here. I kind of averaged down off of one of these wicks down here. I had like a 90 something average, and then or an 80 like 8 average I think it was, and then they ran all the way up to here to 118. But that's why it's important to always talk about getting that, or always think about your plan and really sizing accordingly to what your plan is, right? I mean, I talked about how I'm looking for a discounted premium on my contracts for a much deeper, higher low to be tested within this general range. That's exactly what we got. These premiums down here, guys, were at 74 bucks, and they ran to a high up here at almost 120 a con. So that's a 60% return on a 1 day to expiration scalp within potentially a couple minutes. Now, what I could have really done better was probably just waited and traded my full edge of waiting for that higher low, because I already did expect it a little bit. I kind of just got a little bit of FOMO with the breakout, which is fine because I sized accordingly to it. But, once you see that suck up high volume hammer candle, you could potentially catch a secondary entry down here where they shake out a couple more, whatever it may be, one of these wicks down here with a tight risk being this low and a take profit being your VWAP. So risk to reward wise, like I said, for a 1 DTE long trade position, that is a pretty solid trade, with your stop being down here, your take profit being up here at this buy side liquidity. So this range, this range, whatever it may be, we kind of swept that. A false breakout over VWAP, and then obviously, send our way down. So that should be your general take profit. That is a over a 3-to-1 risk to reward, so that is still a valid trade, and even in terms of a scalp. And then obviously down here at this lower high, obviously if you wait for the suck up on high volume in a fake out or a higher low, a valid higher low, and you catch a secondary entry down here, that could be a very valid risk to reward. Or like I said, you could potentially take a 618 fib stop, which is all the way down here. So if you really wanted to catch this down here in this range, you could just say your long position, in which I did actually. Your long position could be something like an entry down here off of the middle of this wick, I'd say. Stop loss at the 618, potentially the 0.50 if you want to stay tight. Or you could do one of these wicks down here. Uh, generally speaking, it should be around here. 50-cent stop. That might be a little bit rough on a 1 day to expiration. Not necessarily, but let's just say down here, and then your target's going to be this buy side liquidity up here, which is now a 4-to-1 risk to reward. So overall, just a solid risk to reward aspect when it comes to looking at things like this. Oh, and then obviously, if we never really had enough steam to really push this up back above that 295 psych, this is going to eventually just be sellers that had a sell test under a particular level, and then obviously they didn't really like that, and buyers then, or they initiated obviously a suck upwards, and then, banks are really looking to seek where that buy side liquidity is going to be to sweep that range, like I said, above 295, in which we did get a wick extending all the way to 295.07. That 7 cents push upwards above the level could potentially, be a sweep of liquidity. 295.08 actually. So 8 cents above a level, a psych level where a lot of positions and a pool of liquidity is going to be sitting could be detrimental to an institutional perspective, right? So we swept that high, and then we started to shift our structure. We got the lower high off of VWAP with this ugly looking candle, and then a absolute bloodbath into the end of the day. So that's the NVDA trade, or the meta trade. Pretty clean, a little bit sloppy, but sometimes you also need to understand that your entries are never going to be perfect, right? So you need to have very solid risk management, and that's, like I said, why I grabbed half size on this, anticipating a potential breakout. If not, I'm looking for a test of that. I'm looking for a test for a higher low, like I said, off of that range that we've been trading within. So, pretty solid day, 3 for 4 on trades, only a 5% loss on Tesla. Tesla, I was correct with. I just didn't really stay patient enough to catch that gap trap. But yeah, I'll see you guys later.